Hello, VITA students. This training focuses on Advanced Scenario 8, where we will be creating the federal and Wisconsin income tax return for Jocelyn Jones. For some students, the scenario can be a bit more complicated due to the different streams of income, types of deductions, and the additional taxes. Once you are logged into the software, going to start a new 2025 tax return and enter the Social Security number, which has been provided to us in the documents. Regarding the filing status, we have been given this information, so we are going to enter single, press continue, and the personal information page will pop up. I'm going to go ahead and enter the information that has been provided with regards to the client's personal information. Once you review the information, you'll see that none of these boxes applies except this box, which was checked on form 13614-C. Forgot the date of birth. So we are given this information. All right. This information is for the Wisconsin return. No, the answer to this is no. The filing status is single. Right, so we are going to go back to the information provided, and we will see from the interview notes that Jocelyn she is a paralegal. She has W-2 income, which has been provided. So there is the W-2. She also has self-employment income, investment income, and another type of income, which is the early IRA distribution income. But we're going to go ahead and start with the W-2, the employee income. Now in the income types, you can see Form W-2. We're going to enter the information that has been given to us, provided on the W-2. Go ahead and just change the zip code to make things easier. Box 1 of the W-2, C, is $42,700. There is $3,300 federal income tax withheld. Box 3 is $43,700. And when you enter the correct amount in box 3, box 4 automatically populates the correct amount. And the same with regards to box 5. When the correct amount from the W-2 is entered into box 5, box 6 automatically populates. The code we are given on the W-2 for box 12A is D. Box 13, retirement plan is checked, and the amount is $1,000. For box 15, we're going to list our state. The amount from box 16 of the W-2, and the amount from box 17 of the W-2. All right, so that is all the information from the W-2 that has been provided. Let's see. Here. The employer's state. All right, so this was provided on the W-2. All right, so we have finished the W-2 or employee income. The next step will be to enter the self-employment income. Again, from the interview notes, we can see the client is also self-employed, delivering meals for Fast Eats on the weekends. She received a Form 1099 NEC, a Form 1099K, and let's start by going to, let's look in the income sources. All right, so Schedule C is where income, self-employment income, is entered for a sole proprietor. So which is the case for our client. So we are going to click on Schedule C. All right, so we are going to enter the relevant information in this screen. We are not given a business name, so we're going to leave this blank. What we'll do is we'll just enter the client's address that we were provided. All right, now we were given a business code in the interview notes. So let's put in the code that was provided, and Courier's Messengers pops up. Press continue. All right, so let's go to questions about the operation of the business. We are given the information that the client uses the cash method of accounting. Which is checked. We are not given this information regarding closing inventory, but we'll just go ahead and click cost. That is the most typical type evaluation, but in this case we don't have inventory, so we're just going to click cost. Other questions. We are not given this information. We're not given this information. We are going to check this because the client does materially participate in the operation of this business. In other words, she is an active participant. This is not a passive investment. All right, so we are not given this information, not this information. Now, we're going to check this. This is already checked, but we're going to keep it checked. Press continue. All right, now we are going to go to the income section. All right, so the gross receipts or sales, including income reported on Form 1099-K. Now, we were provided with a Form 1099-K. So we're going to scroll down. All right. Now, the amount that we are going to enter is $8,225. The second line does not apply. The third line does not apply. However, the fourth line does apply. And that amount we are also given in the interview notes. She received additional cash payments of $750, none of which were tips. So we are going to enter that amount in other income. Okay, now you'll also see that we have been provided a Form 1099 NEC. We're going to scroll down and look for the 1099 NEC. This is otherwise known as non-employee compensation. This is from the Fast Eats company. Now, on this particular screen, there is nowhere to enter an amount from the 1099 NEC. So we're going to press continue, and we are going to look for the 1099 NEC. Now, one way to search for a specific form or schedule is the form finder. Let's see if we can pull up. All right, so we are going to click on this. And we are going to provide the information from the 1099 NEC that was provided to us. So we can see from the form, the amount in box 1 is $1,000. None of the other boxes apply, so we are going to click continue. We're going to click the Schedule C. And we already created the Schedule C. So by checking this box, the Schedule C we created comes up, and this amount is going to flow to the Schedule C. All right, now we next need to enter the expenses that our client has incurred with regards to her self-employment. Now we are given these expenses in the interview notes. For example, $180 for the insulated box rental, $50 for vehicle safety inspection, $700 for Fast Eats fees. There's also receipts for out-of-pocket expenses.
$120 for tolls while making deliveries, the $500 for traffic ticket, $320 for Jocelyn's lunches, and the miles that she has put on her car that are related to the self-employment. Now, if we scroll back up and we focus on these two out-of-pocket expenses, the $500 for a traffic ticket is not tax deductible. The IRS prohibits deducting fines and penalties paid to government entities for violating laws, including traffic tickets and parking fines, etc. So we are not going to do anything with regards to this specific expense. Now, with regards to the client's lunches, these are also not tax deductible because they are considered personal expenses. Lunch for yourself while on the road is typically a personal expense, not a business deduction, as you'd have to eat anyway, as the rationale goes. Essentially, you can't deduct meals just because you're working. The meals must be a specific business interaction, purpose, presence, in order to be able to deduct them. So we are not going to be doing anything with regards to the $320 for the client's lunches. The other expenses, however, we will be entering those in the Schedule C. Now, as previously shown on the interview notes, we have various expenses, the insulated box rental, the vehicle safety inspection, the fast eats fees. There are numerous areas where on the Schedule C where you can enter expenses. You can check on the general expenses page to see if there's a specific category that applies to the expenses that we are dealing with. Now, regarding our specific situation, I believe that it may be easier to enter those expenses in the other expense category since there isn't a specific listing in the general expense category. So we're going to go into other expenses. And we are going to just one by one enter the expense and the amount. All right, so those are the for the expenses that we can deduct on the other category. Now, we are also given the amount of miles that are driven with regards to the self-employment. Now, we are given information that the total mileage on her vehicle in 2025 was 12,500 miles. Of that, 10,000 miles were personal and commuting miles, which leaves a leftover 2,500 miles that we're going to allocate to her business. There is a specific category line item for this, so we're going to click car and truck expenses. This information we are given in the interview notes. And I'm going to just enter the balance in the other. All right. We're not given this information. We know that she uses her vehicle for personal use as well as her self-employment use. So we're going to check that. We are going to check this because I believe the rules require that you have some evidence to support this deduction if you are going to claim it, like a log, etc. So we're going to click those. All right, I believe that is all we need to do regarding the self-employment income. All right. Okay, now we do have, let's go back to income. We do have additional streams of income, as mentioned earlier. So we have investment income. As mentioned, investment income and which is reported on a consolidated broker statement. If we scroll down, we will get to the investment income statements. All right, so we can tell by looking that we have dividend income, which is reported on Form 1099 DIV. We have interest income, which is reported on the Form 1099 INT. And we have capital gains or losses, which is reported on Form 1099B. All right, so what we're going to do is we are going to start with the dividends and interest income. We can see it listed the Form 1099 INT and DIV right here. So go ahead and press begin. We will go ahead and start with the dividend income, since that is listed on the consolidated broker statement first. And we'll enter the information as provided on the consolidated statement. All right, so box 1A on the statement includes 300. Box 1B is 225. Box 2A is 350. All right, so the only amounts from the consolidated statement with amounts are from 1A, 1B, 2A, and 5. All right, so we're going to enter those amounts. And we're going to click continue. All right, so next we will enter the interest income. All right. And we can see that there's only one amount to enter, and that's box 1. So we're going to enter the $50 from the statement in box 1 here. All right, now for the capital gains or losses, proceeds from the broker and barter exchange transactions, which is basically the buying and selling of stock in this case. We are going to enter that Schedule D Form 8949 line. All right, so we see the Form 1099B or broker statements. We're going to enter this. All right, so we can see that there are two different transactions we need to enter. One is for Nebraska Company common stock, and the other one is for Iowa Company common stock. For the first transaction, we'll just enter Nebraska Company common stock, the date acquired. We are given this on the Form 1099B. we are also given the date sold. The sales price we are given. On the Form 1099-B, it's listed as proceeds, but we're going to go ahead and enter that amount. Now, the cost basis type. In this case, this basis is reported to the IRS. So we will check that option. Cost, we are given that on the Form 1099-B. We don't have any adjustments, and this is not a collectible exchange, so we're going to press continue. All right, so the next transaction is for the Iowa Company common stock. We are given the acquisition date. And the sell date. We are given the sales price. Otherwise known or reported as proceeds on the 1099-B. Now select cost basis type. We can see on the broker statement long-term transactions for which basis is not reported to the IRS. Go ahead and click this option. We are given the cost. No adjustments need to be made that we're aware of, that we're given in the information, not a collectible exchange. So we're going to click continue. Okay. Now the next item of income is from the early distribution of the IRA and we are given that information on the 1099-R. So let's see here. Here's the form 1099-R. We're going to click all right, so the information, we're going to enter the information as given to us. So this box is checked on the form, as we can see, to be taxable amount not determined. And as we can see in box 7 of the 1099-R, distribution code 1 and the IRA SEP simple is clicked. There are no other boxes we need to fill out. Just click this and see what this is. All right, so that doesn't apply. Let's all right, now we know that this is the early distribution was from a retirement plan. And unless an exception applies, there are penalties. Now we are given in the interview notes that part of this early distribution was used for tuition. Now that took an early distribution of $5,000 from her IRA. She used $2,600 of the IRA distribution to pay her educational expense. So using early distribution IRA amount to pay for education expenses is an exception. So we're going to have to enter that amount on Form 5329. All right, so we are going to scroll down to the early distributions that aren't subject to the 10% tax. So we are given that of the $5,000, Jocelyn used $2,600 to pay her educational expenses. Select the reason. We are going to click Higher Education Purposes. All right, I don't think any of the rest of this applies, so we're going to continue. We're going to click No. Continue. All right, now that is it with regards to income. Next is deductions. We are given that the information where Jocelyn is paying on her student loan from 2019 when she completed her undergraduate degree. And we are given the 1098E, Form 1098E, or the student loan interest statement, which is right here. So we are going to click on the adjustments category. Scroll down to student loan interest. And we are going to take the amount from box 1 and enter it here, which is $3,750. Okay, now the next step will be the education credit to see if we can apply for the education credits. Client is working towards her Juris Doctorate degree. She took a few college courses this year at an accredited college, and that's what she was using the 2,600 of her early IRA distribution to pay for. Now, let's go into the credit section. And education credits. Now, we were provided a 1098-T, which is the tuition statement. Let's find this. Yep, it is right here. That's the tuition statement. So we're going to click our client. We're going to click yes. We are going to click no. We have no indication that that is the case. We're going to enter the information as provided. So the amounts from the 1098-T in box 1, payments received for qualified tuition and related expenses is 2,600. So we're going to enter that amount here. So we know that the client has already completed her undergraduate degree. However, and we also know that she's paying on her student loans from that degree. Let's see. Doesn't seem like she's half-time, or she seems like she's taken a couple classes. She took a few college courses this year, so say yes. We're not given that information, but I'm going to click no. Let's click no and see. All right, so gives us the lifetime learning credit that the client can take. We're not given any information to indicate this. We're going to click no and continue. All right, so the state return, in this case, we do not need to make any adjustments with regards to the Wisconsin return. If the federal return is correct, then the software will automatically transfer the applicable numbers to the Wisconsin return. So we can go ahead and click continue, and it is going to calculate the return, and it's going to bring up the summary. In this client's case, the amount owed on the federal return will be $845. And the amount owed for Wisconsin will be $951. Better way to view this is to click on Preview Return. Amount due, $845 for the federal return, and amount due for Wisconsin, $951. Now, you can scroll down and view in detail the federal return and the schedules and forms. As well as the Wisconsin return. Here's the Wisconsin return. In this case, the numbers automatically flowed from the federal return, and we did not have to make any adjustments. This is advanced scenario 8 for Jocelyn Jones. Thank you very much.